The $50 billion carbon credit rush, why smart money is buying trees before it's too late. The market that's about to explode from $8 billion to $200 billion in the next 6 years, and 99% of people have no idea it exists. While everyone's chasing crypto and AI stocks, the smartest investors are quietly buying something that literally grows money from dirt, and the supply is running out faster than anyone expected. In the next 4 minutes, I'm going to show you exactly what's happening in the carbon credit market and how you can position yourself before this opportunity disappears forever. Section 1. The market explosion. Right now, only 537 companies globally are buying carbon removal credits, but over 10,000 companies have committed to net zero targets by 2030. The math. If just 10% start buying, the market needs to scale 25 times overnight. New regulations force companies to buy starting in 2026. Current market, $8 billion. Projected, $200+ billion. The winner, biochar, dominates everything. 86% of all carbon removal deliveries in 2024. 80% of buyers choose biochar delivers credits in 1 to 3 years versus 20+ years for trees. But here's the problem. Section 2. The supply crisis. Supply is disappearing. 62% of high-quality biochar capacity for 2025. Sold out, 28% of 2026 supply. Locked up, only 30% of biochar projects meet quality standards. Smart money strategy. While most people buy carbon credits at market price, companies like Microsoft, Google, and Stripe are signing offtake agreements, pre-ordering years in advance. The results: 15 to 30% discounts compared to spot prices. One company saved $918,750 on a 3-year deal. Historical example, $125 per ton versus today's $165 per ton. Section 3. The price explosion. Coming why? Prices will skyrocket. Biochar prices already grew 29.2% annually for 4 years. By 2030, demand could be 6 times larger than supply. 70% of new biochar capacity fails quality standards. The perfect storm. 10,000+ companies must start buying by 2026. Each facility caps at 100,000 tons per year. Less than half of 2030 demand is financed. Reality check. Companies without offtakes risk missing climate targets due to supply shortages. Section 4. How to position yourself. Your options. Direct offtake agreements. 15 to 30% discounts. 1,000+ ton minimums. Carbon credit investment funds. Lower minimums. Professional management. Biochar production investment. Highest returns requires significant capital. The timeline: 2025. Last chance for favorable terms. 2026. Regulatory requirements kick in. 2027. Plus, spot market chaos. Premium pricing. Call to action power. Play. The carbon credit market is moving from speculation to necessity. In 5 years, you'll either thank yourself for understanding this early or watch others profit from the biggest commodity rush of our lifetime. If you want to dive deeper into carbon credit investing, contact bioeconomysolutions.com and book your private roadmap conversation today.